What up, sir?
Sloss.
Thanks for having me.
All right, man. You are founder of QFEX, 24/7 no broker perps exchange for equities, commodities, and FX. I framed this up as high frequency trading for everyone. I'm not sure if that is fair or not, but maybe in your own words, what the hell are you building, sir?
Yeah, I think it's totally fair. It's like a core part of what we're trying to do. I used to work in high frequency trading, right? So I worked at Flow Traders, Tower Research, some of the top like high frequency firms out there. I worked on crypto exchanges, I worked on traditional exchanges, and I saw the experience that crypto exchanges managed to give people, right? 24/7 trading, higher leverages, kind of lower fees, less intermediation, more trustless. And these are all things you can get as well, but you have to be like a professional, like high frequency trader working for a big firm with like a big relationship with a bank, right? I thought, why can't everyone have access to that kind of UX? And particularly those guys who are kind of stuck in the traditional world trading through their broker or whatever. And institutions who trade huge volumes against banks and get ripped off every day. So, we looked very carefully at what crypto exchanges do in terms of their design choices that allow them to offer these features. And there are some tweaks you have to make for traditional assets, but ultimately that's what we're building is crypto-like trading experience and trading platform and exchange and brokerage and clearinghouse all in one for traditional assets, equities, perps, that kind of stuff.
So who's the market that you're targeting here?
Yeah, we're going to start with kind of typical traders, individuals, confident people, like individual traders, basically retail traders.
Mostly focused on, is the idea that you're bringing crypto dynamics into equities or?
Yeah, equities and commodities. Yeah.
Okay. So it's not like the timeline warrior here is deep into crypto Twitter that's looking for this. It's somebody who's maybe more Wall Street adjacent.
Wall Street adjacent, I think a lot of guys on, it was certainly not anyone who's like too DeFi native. I would say that.
Okay.
So, maybe guys who like don't necessarily have a Web3 wallet or like they've never used it. They have a brokerage account as well. Yeah, I think that's the perfect style person. Yeah.
Is the core value prop for these guys going to be the ability to trade on the weekends and nights, or is kind of the low fees? Yeah, like when you're talking to them, like what's the thing that's going to attract them?
So they're all there. I think like the biggest thing is the leverage, to be honest, and that's like structurally the biggest moat we have is if you look at how traditional market structure works, kind of design choices have been made there on intermediation and like who basically cuts. Basically who picks up the loss if somebody loses money in the case of like a big move and people are over leveraged. They've made very different choices in crypto that allow them to offer more leverage and more safely. So there's two things there. Generally, crypto exchanges, I think, do offer too much leverage, but they have designed things so that they are more capital efficient. Like if a crypto exchange decided to start listing stocks at 5x leverage or 3x leverage, I think, which is what you can get on Robinhood, the crypto exchange would be much safer. And that's because the exchange itself knows the user's positions and their balances and can liquidate them on its own books, right? That doesn't happen in traditional markets. Like a stock exchange, like New York Stock Exchange, doesn't even know, or like let's say a futures exchange, right, like CME or ICE, it doesn't know the sum total of all the positions of the people who trade on its exchange because they're too intermediated. There's like several layers before retail can get access to that.
So how do liquidations happen on traditional markets?
Yeah, so it's basically completely up to the broker. It's not up to the exchange at all. The broker is financially on the hook if one of its users loses money, and then it has like an upstream relationship to a clearinghouse, and the clearinghouse is on the hook if the broker goes bankrupt. So the clearinghouse doesn't want the broker to give too much leverage. The broker doesn't want to give too much leverage. And if you look at the way the charts of a lot of these brokers are set up, it's like, any trade they do on behalf of their customers can be disputed if it was considered unnecessary. So they never really want to close people out. So they just don't offer enough leverage to get to the point where they can close them out, basically. And that's the different design choice the crypto's made.
Got it.
To the one crypto's made.
Can you talk to us about how you're approaching market genesis? Because I think there's kind of an interesting bootstrapping problem here. I've seen you talk a lot about needing to like attract market makers and market maker dynamics. And I'm really interested to kind of hear you talk through that.
Yeah. This is my bread and butter. Obviously, I worked in high frequency trading, mostly market making strategies, to be honest. It's a tough problem, right? It's like weekend equities, there's not much else open. There's nothing else open, as a matter of fact. It's not like bridging a 1 hour gap in the middle of the weekday when there's a bunch of other risk assets open, or there are other assets open in different parts of the world. It's like a fundamental supply demand, like imbalance problem. And that's the kind of problem I used to tackle pretty much every day in my last role, is making models that can basically really concretely predict where the price of things are going based purely on like the supply demand factors on that stock and correlated stocks, right? So it's like, how, okay, if you want to trade like a US stock that's listed on the NASDAQ in Germany, you can do that. That's like pretty easy. You just get the information from Germany and you quote around that. Now, what if you're the one who wants to quote it on the NASDAQ, right? There's nowhere else to get information from. Yes, there's a market there already, but if it moves up, you're going to be the first one to get hit on the move. So that's really the problem we're trying to talk through. We have a bunch of market makers on board who are very interested in tackling this problem. A lot of them have kind of experience in providing really tight liquidity on like meme coins, because meme coins are kind of market genesis, right? It's like a brand new uncorrelated product appears out of thin air. How do you provide two-way pricing for this, right?
Inefficiently.
Inefficiently.
I mean, how do they do that and consistently make money?
Yeah, there are two classes of market maker, honestly. There are some that don't try and make money on the trading side. They just get like the tokens or whatever it is that try to quote for free and just try and sell into those. And that's like one way to make money. There are a couple of market makers out there. I would say Jump Trading is like very, very good at this, that are able to monetize these very new markets very efficiently. There are examples of products that exist out there that like VIX futures, for example, that are very, very hard to price using anything else. That firms are very good at trading. To do it, basically, what you need to do is like get all of the different alphas that you think can move this market, whether they're on their own order book or a different order book, turn them into equations. So basically think, okay, when this happens, the market should move up, turn that into an equation and basically a number that will go high when you think the market is going to go up or low when you think the market is going down. Then combine them using a machine learning model to produce an output price. And that's basically what I used to do every day in my last role.
Okay.
So it's a long-winded process and it's a lot of maths and stats, but when it works, it's like beautiful.
Yeah, really interesting. So are you guys building, is this a DEX or a SEX or some kind of hybrid thing? Like what?
Yeah, so we're on crypto rails on the margining side, but the order book is off-chain. And we've kept it like that because for traditional markets, like people expect like really good performance on the order book, performance that you just can't get with like a pure DEX, because you have this like distributed state machine, right? And it just takes long for things to find consensus.
Performance being like latency?
Latency, order throughput, things like that. And like the market makers we work with, they're kind of a bit more like grown up market makers, kind of like traditional market makers. They have higher standards. And yeah, that's the kind of market that they'd want to trade on, basically.
I'm curious, what category should I put you guys in? Like who do you see as competitors, or how do you define the landscape?
Yeah, I mean, a landscape on the SEC side, there's one exchange called Architect, run by Brett Harrison. He used to run FTX in the US. They have launched a very limited offering a couple of weeks ago, just on FX, just to institutions, just outside the US. So I don't know who's trading on there. And yeah, that's pretty much it on the SEC side. I would say the off-chain side, kind of more on-chain. There's Trade XYZ and Ostium has been trying this for a while. I think most of their volume is still kind of on crypto rather than on TradFi. As we talked about like earlier in this conversation, like I think we're not targeting that hardcore DeFi native like trencher. We are actually in touch with the Trade XYZ team. I think anything they do to grow mindshare on weekend equities, equity perps, commodity perps is a good thing for us. And a lot of the market makers we have on are also market making on there. And there'll be kind of market making cross exchange hedge risk.
I'm interested in how you're approaching kind of the sequencing of like asset types, I guess, from like equities to indices to commodities to all this other kind of TradFi stuff you could integrate. Like how are you thinking through that?
Yeah, it's very related to kind of what liquidity we can provide on that and what already exists out there, right? So this has been in consultation with market makers. We're going to list kind of NASDAQ and then US tech stocks first. There's already kind of products out there that kind of trade a little bit over the weekend on these kinds of things. DATs as well, because DATs are very closely linked to crypto, and crypto obviously trades over the weekend in decent volume. And then gold, tokenized gold, been trading for a little bit as well. I really view that phase of things as kind of, let's take what's already out there. Tokenized is not ideal. We offer more leverage. We offer kind of perps on the underlier rather than going via the tokenization route. Let's improve that market that exists already. And then once there's kind of decent mindshare in equities, especially over the weekend, then all the stocks are somewhat correlated, right? You can add all the US equities; they're all kind of correlated to this core basket of tech stocks, and just build out from there.
Right.
And then maybe other markets outside the US as well.
Yeah, interesting. I wonder if you have a take on the market today. I think a lot of talk. Obviously, market opens in New York, and some giga chads out there dumping a bunch of Bitcoin into the market. Sounds like you have like a deep understanding of market making and these markets generally. Is this some sort of structural thing that's the result of 1010? Do you have another take?
Yeah, I would say it's probably not 1010. A lot of the stuff now is like macro driven. So that's whenever you see a move in crypto now, especially on like majors, you have to look at the overall macro sentiment, right? Like if US stocks are up, like generally Bitcoin's going to be up. If US stocks are down, generally Bitcoin's going to be down, and vice versa.
It just hasn't been the case recently.
Yeah. There's idiosyncrasies, right, with crypto. So on 1010, like US stocks also lost a lot of money, but obviously that move was much amplified in crypto. I think what's happening now is a lot of people are kind of marking the cycle as being somewhat over, especially whenever you have like a big liquidation event. You have to look at where the force flow is, and if there's any kind of structural reasons for market trends and markets changing. So those structural reasons can just be, people hit stop losses. Big funds have certain capital requirements. They have drawdown limits. When they hit those drawdown limits, they don't dump everything immediately. They have to wind down in like an orderly way. So they might wind down over like a few days or a few weeks or a month or 2 months, depending on how big their book is. So without naming any names, like I know of quite a few people who hit those drawdown limits. And we could still be seeing the residual effects of that. I think, it's been over a month now. It can still be happening. There could still be residual things happening. There could be knock-on
the longer
effects.
it lasts, the bigger they've been, right?
Exactly.
Yeah.
There could be some like downstream effects of those liquidations push more people into liquidation and drawdown. Generally, the market's there to find like an equilibrium between buyers and sellers, right? And once that equilibrium has been reached, I think kind of the gravity should stop and like fundamentals should take over again, and we'll see that beta to kind of other risk assets come back to life.
Yeah. I'm interested in how you're conceptualizing the big opportunity here. Like, are you making the bet that perps are going to eat like a massive percentage of trading in the future? Like, I guess maybe if we project 5-10 years out, like what percentage of trading activity is happening on perps versus kind of traditional exchanges?
Yeah, absolutely. Like I think the opportunity in traditional markets is like 1,000 times bigger than crypto, right? A lot of crypto is like, facilitating retail trading. There's some institutions, maybe they have some models against TradFi or whatever. If you look at like S&P E-minis on the CME, right? The S&P E-mini future, that's one product on the CME, trades $500 billion a day, which is 5 times bigger than the total ADV of like all crypto exchanges, DEXs, SEXs, perps, spot put together, right? This gives you an idea of the scale of the problem, right? And how big it is. Now, the interesting thing about perps is like, if you talk to a typical trencher, they'll just say, yeah, perps are like, they're a way to like make money and go 10x level long and like make a lot of money in like short period of time. Perps are very cool for their actual design decisions and how they work. When I was at my last job, there were guys on my team making like 8 figures every single year, just trading like one CME future the day before and the day after the roll every single year, right? So that's 8 days a year. It expires quarterly. Now, why do futures expire? It's like a hangover from the fact that futures were meant for farmers to like get rid of their harvest at a certain period in time, right? So why is S&P futures? Why do they expire? Well, it's just because they inherited this property from the wheat futures, which is crazy. Yeah. So I think a lot of these institutions who want a better product where they don't have to pay the cost of this roll are going to switch to perps. I think you already see a lot of it in kind of over-the-counter markets with banks. Banks trade swaps over-the-counter with their customers all the time. Now, if you want to de-risk that, remove the counterparty risk, and improve liquidity by seeing it on a central limit order book, there's no reason that wouldn't switch to perps. And then retail volume, obviously, there's like a lot of US retail volume on equities, which is trading options, zero-day options, specifically for the leverage. Like they don't really care about the convexity or the optionality aspects. I think they would find a much simpler product with like much more concentrated liquidity on a single order book if they switch to perps. So all roads basically lead to perps. I think in TradFi, the opportunity is just like orders of magnitude bigger than crypto. I think the crypto play has been done and done and done and done again. We've made a lot of design decisions, and the time is to like move them to the next level, which is like TradFi.
Interesting. I think there was a discussion yesterday about, so maybe the question is, are all perps made the same? Coinbase perps are not actually perps because they expire in 5 years. Is there like a lot more nuance to how these products are structured than maybe the average timeline user understands?
Yeah, absolutely. I was just on a call with at some point for a period of 18 months, they were the biggest market maker on Hyperliquid. And they were speaking to me and they were like, I don't know how Hyperliquid was going to pull these trad perps off because they still have the 1 BIP funding, like default funding per 8 hours. That's like around 12% a year. But these stocks only go up like 8% a year on average. So you're just paying the cost of going long, like in funding, right? So I think especially on the funding formula side of things, there are a lot of improvements to be made. And then our docs are going live tomorrow. Everyone can kind of examine it. We don't have that 1 BIP bias basically in our funding formula. The 5-year expiry thing, I think it's a bit of a misnomer. Nobody really holds positions for 5 years. I think that's not a major problem, but in particular, the way the funding calculation is done and the way it incentivizes market makers to bring the price of the perp back in line with the underlier and how that's designed, I think different exchanges do it in different ways. And we've been fortunate that, because we're designing a whole new thing, we can just go out and understand each of these individually and bring the best parts of each formula into our formula and like optimize it for TradFi.
Yeah, maybe last question before we let you go. I'm curious why you have decided to become a founder and build a perps exchange instead of just making a bunch of money in HFT.
Yeah, I think a lot of things came together. So I have like an amazing co-founder, Josh, who I always knew would be like a great business partner. He worked at Citadel. He quit his job like around the time I was thinking of doing this. We got funded like really, really quickly by YC. Administration change, regulations loosened. I just thought like this is a once in a lifetime opportunity. And I think over the next few years, you're going to see a lot more ex-quant, ex-HFT founders come into the space because ultimately we're trained to think about expected value and we're trained to think about kind of optionality. And this time in life, like I'm in my 20s still, I have like a decent amount of money saved in the bank. Like there's nothing for me to lose by doing this play. And you kind of want to go beyond that kind of sitting in your comfy job, making 6-7 figures a year, and see what you can really do. So a lot of things lined up for me. And I think, a lot of my quant friends are kind of moving out into the founder space or into tech or into AI as well. I think it's a natural product of the way we think and the way we see things are going.
Awesome, man. So, with your docs coming up tomorrow, when is this thing live?
So we're going to have our soft launch to our, we have about 10,000 people on the wait list. We're going to do 100 a day in about 2 weeks. Website will be unblocked tomorrow. It's got a whole new finish to it. We've like revamped the entire GUI based on feedback. And then we're hoping for like the full open launch in January. If you're not on the waitlist yet already, you probably won't be on until January or February next year, unfortunately. But yeah, we're looking forward to
people like that. You can't say that.
You DM me.
There's a chance. There's always a chance.
There's always a
DM
chance.
me on Twitter,
maybe. Get your hustle going. Get your hustle. All right, man. Well, appreciate you illuminating a category that we haven't really thought too deeply about, and very intrigued to see how you bring it to market.
Yeah, this is a genesis of a new market. So this is like the founding days of Bitcoin. We have the founding market makers, the founding exchanges, the founding users. Everyone's coming together, and this is the next new thing. You're going to see high leverage trading over the weekend on equities for the first time.
Let's go.
Founding day of Bitcoin. Oh, man, all right. Okay.
I promise we'll check in 10 years.
Yeah.
Let me know.
All right, brother. Thanks for hanging out with us today.
Peace, man.
Cheers. Bye-bye.